Everybody, welcome to today's fundamentals. Hello, Peter.
Hello.
A new day, a new week. How have the markets been behaving?
Well, we had a surprise on Friday with the release of the US employment report for November. More or less shook the markets. Now, the unemployment rate remained unchanged at 3.7%, but that was expected. That was not an issue. The surprise was the non-farm payrolls figure. It was expected to drop from 261,000 to 200. It didn't. It actually slightly rose to 263K. So practically the report showed that the US employment market remains tight and still maintains in full its capacity to create new jobs. So it was better than expected. Now that tended to drive some speculation about the Fed's intentions and whether the bank is going to be more hawkish once again, and practically provided some support for the US dollar, while on the flip side, it tended to weaken US stock markets. Now that was a market overreaction, and by the end of the day, actually until today's Asian session, the US dollar was once again on the retreat, and we had US stock markets which ended their day on Friday rather mixed. So more or less it was a small roller coaster. Nevertheless, the issue is still there, yet we have to note that the market expectations for the time being are for the Fed to continue with a 50 basis points rate hike. That would be in the meeting next week on the 14th. And Fed funds futures implied probability for such a scenario around 90 to 91%. That was about the same probability which was provided before the release of the US employment report for November. So I think we're back in business as usual, despite the shock which the market was experiencing on Friday afternoon.
Didn't we have OPEC's meeting on Sunday?
Yep, we did. And OPEC's meeting decided to keep production levels unchanged. Largely, that was also expected by the market. That was not so much of an issue. But we have to understand here the surroundings, the environment of the oil market. On a fundamental level, we note that OPEC is going to be keeping the production steady, but at rather lower levels. Let's not forget that about 2 months ago, it had decided a 2.2 million barrels per day production cut. So that keeps the oil market rather tight on the supply side. On the other hand, we also have to note here that we had EU banning seaborne oil imports, which is a major issue in the sense that more or less that would tighten the oil market even artificially, even more. And I would be also noting that we had the G7 decision to cap oil prices. Now, Russia answered back by stating that practically it's not going to be accepting the oil price cap, and it wouldn't even hesitate to actually cut production in order not to accept it. Definitely Russia is going to be seeking new clients or increased clients in China and India, but that could lead to further tightening of the oil market. On the other hand, on the demand side, the Chinese are slowly but steadily easing their COVID measures, which may allow for increased economic activity and in turn more consumption of oil. So practically we're having an oil market which is being squeezed both on the supply side as well as on the demand side. And that's expected at some point. It may not be immediate, it may take some time to drive oil prices higher.
And what's on the calendar for today?
Well, we already had Turkey's CPI rates, which slowed down just a bit. It remains at rather high levels and still an issue, but may ease the pressure a little bit on Central Bank of Turkey as it's cutting rates. I would also note that we had Eurozone Sendex Index, we had Eurozone's final composite PMI figure, we had UK's services PMI figure. In the American session, I would be noting from Canada, the building permits, and from the US, the factory orders. I think, though, the main release of the day is expected to be the US ISM non-manufacturing PMI figure. May I remind you that the ISM manufacturing PMI figure showed a drop below 50. It was the first post-pandemic. The drop practically implied a contraction of economic activity. Should that be followed also by an easing of the economic activity in the non-manufacturing sector, that could be an issue for the US economy as a whole. And during tomorrow's Asian session, it's not so critical, but I still like to watch it on a macroeconomic level. We get Japan's all household spending. Now, should there be an acceleration, that could also be implying that we may see further inflationary pressures in the Japanese economy as the demand side still increases.
And what's up on the monetary level?
On the monetary level, I would be highlighting during tomorrow's Asian session RBA's interest rate decision. The bank is expected to hike rates by 25 basis points. There's still some uncertainty about the actual size of the rate hike. Now, in the comments which RBA Governor Lowe had made, I think that was last week, he had mentioned that the bank is going to continue to examine rate hikes on a case-by-case basis. Practically, he implied that the bank could also remain on hold, could also proceed with a 50 basis points rate hike. So there is some ambiguity here. Overall, though, our base scenario is that the bank will proceed with another 25 basis points rate hike. And the big question which is being posed if the rate hike is as such, the big question is then what the tone will be in Governor Lowe's accompanying statement. Should the tone show some hesitation, we may see the Aussie weakening further.
And what about the rest of the week?
Well, let's make a start with the monetary front for the rest of the week. The first would be BOC's interest rate decision. That would be on Wednesday. Now we have more certainty here. The bank is expected to hike rates by 25 basis points, and the market seems pretty certain about it. We're talking about CAD OIS implying a probability of around 91, 92%. So I would expect the rate hike. Once again, the question falls on the accompanying statement. Should the bank show intentions to ease its rate hiking path, or once again show some hesitation, that could weaken the CAD this time. Mind you, that on the monetary front this week, we are not going to be having any Fed policymakers speaking, as practically there is a moratorium applied before the Fed's meeting next week, where practically Fed policymakers are not allowed to make any statements. So the interesting part here is that the market sentiment may be driven mostly by analysts and by headlines of media. So it's going to be a little bit sensitive. That's one. The second issue I would be noting, as for financial releases, I would be noting on Tuesday from Canada the trade data. And should we show a drop of a narrowing, I would prefer to say, of the trade surplus of Canada, that would be a little bit of an issue. The main currency, though, which I would be keeping an eye out besides the US dollar, would be the Aussie. We have a number of releases which could affect the Aussie. I would make a start with Wednesday when we get Australia's real GDP rate for Q3. On Thursday, we're getting Australia's trade data. And we're getting also, I forgot that, On Wednesday, China's trade data. While on Friday, we're getting from China the CPI and the PPI rate. All four releases could affect in one way or another, to one degree or another, the Aussie. Other than that, I would be noting from the US, we are definitely going to be having more commotion on Thursday and Friday as we get the initial jobless claims figure. And on Friday, it's going to be interesting to see how the preliminary University of Michigan Consumer Sentiment Indicator is going to be coming out. Should it drop, that would be imply that the morale within the US economy on the consuming side is lower. And that could be a negative effect.
Any final comments?
Once again, it's going to be interesting also how US stock markets are going to be opening, as practically they seem to have started to digest largely the surprise which was made by the release of the US employment report for November. However, over the weekend, especially about the oil market, we had fundamentals which may change the market's mood and may make it a little bit more cautious. Other than that, I think we may see the market slowly but steadily being more risk-oriented.
Great. Thank you, Peter, for your time. And everyone for watching. Join us after a short break for technical analysis with Peter Yosif.
Welcome to the technical analysis part of the presentation for today. Now in front of your screens, you have the US dollar index. It's the 4-hour chart. Rather stable sideways motion. It seems that the downtrend has been halted. It would be interesting to just have a quick look at the market reaction at the time of the release of the US employment report for November on Friday. Drilling out to the 1-minute chart. Mind you that all charts to be presented are to be of the 4-hour time frame unless otherwise stated, as in this case. This is it. Huge rise. About 100 points. More than 100 points. But we have to note here that the support, back to the 4-hour chart, the support provided did not seem to last. We had to open the European session today to see the US dollar index having some slight gains, at least stabilizing its drop and coming out of it. So let's readjust the chart a little bit. So for the time being, we tend to maintain a bias for a sideways motion between the 105.25 and 103.50. At this point, it would be useful to note that we have in orange the 200 moving average, in green the 100 moving average, and in blue the 20 moving average. All three of them are pointing downwards, so there's still some bearish inclinations. The RSI indicator below the 4-hour chart has practically bounced on the reading of 30. It broke just below the 27, then bounced back up, and it's currently at 40 and still rising. So it seems that the bearish effect is slowly but steadily fading away. Should the bears, for any given reason, regain control, I would expect the price action of the US dollar index to drop, break the 103.50, and start aiming for the 101.30. On the flip side, should the bulls take over, I would expect the price action to rise, break the 105.25. Mind you that the first resistance line was a price support line here and here, And as the price action has broken below it on Thursday, has turned its role into a resistance line. Nevertheless, should the bulls take over, we may see the price action rising, breaking the 105.25 and aim for the 107.15 R2, a level which provided resistance clearly here and here and here. So we have three instances which are very clear, actually four, which are very clear how the price action touched or tested to the upside the R1, the R2, so it would be a pretty valid level for now. Okay, let's go to Euro USD. Euro USD, which has risen. And now this is the big question, whether there is an upward trend line or not. Let's draw it. Seems to be so. Seems to be put on the test again. Okay, before making any further comments, let's make some corrections here. Definitely the 1.0485 resistance line has to be turned into support line, given that the price action has broken above it. Let's go hunting for a new resistance line. And by the way, okay, the R1 is valid. And this, my dear fellows, is the R3. This peak here. Test it again here. And that would be in red. The 1.0935. Lock this in. I'm going to look at certain support lines. S1 seems to be valid. S2, yes. Even more. Okay, the S3. The S3 could widen a little bit. Somewhere here. Could be a little bit higher, a little bit lower. I'm taking this peak. We have a test here as well. Okay, let's keep these levels. Let's readjust. The S2 is now being placed at 1.0295 and the S3 at 1.0103, 1.010. Okay. Widen the chart a little bit. Let's make the necessary corrections on the labels as well. First resistance line being placed now at 1.0605. Second resistance line at 1.0785. And final, so resistance line at 1.09. Give me a sec. 1.0935. Nice chart. Despite the correction low of Euro USD, there's still some bullish tendencies left, and practically I would be noting that as long as the price action remains above the upward trend line, which has initiated since the, let's have a look, the 30th of November. Yep, that would be practically still a signal for the upward motion to continue. Now there's a question about using the crosshair. Actually, when you use the crosshair in the MT4 provides you with the full differential between the price you're starting and the price you're finishing. But the difference is that MT4 provides you also with a fractional peep. So the distance which is being covered, you have to omit the last figure. So practically you're taking the first three. Now, should the bulls maintain control, we may see the price action rising, breaking above the 1.0605 and start aiming for the 1.0785. On the other hand, we are talking about Euro USD, which is, in my opinion, in a make or break position. In the following sense, if the price action clearly breaks the upward trend line, that would imply practically a shift of trend. And now there are two scenarios which are building up here. The first scenario is that the price action breaks the upward trend line, but respects the R1 1.0605 and the S1 1.0485 and allows the price action to remain in this narrow channel here. And that would imply practically a sideways motion. But should the price action break the pre-mentioned upward trend line, break also the S1, and start a decisive move lower towards the S2, then we may see practically a bearish trend line being formed, or at least some bearish tendencies being expressed by the market. So it's going to be a big question whether the price action of Euro USD will be bouncing back up, whether it's going to be breaking, and if so, whether it's going to be breaking mostly the S1 or not. Let's have a look at cable. Cable which has risen, has broken above the 1.2150. Definitely this has to be turned into a support line. Let's go hunting for a new resistance level. No. We have to go back. The crucial point here is this one. Let's drill down to the 1 hour chart. Clear cut movement. Doesn't allow us. Daily chart. Okay. There was some support here, which we can see also in the forward chart, interestingly enough. Here. We can see that this level provided support once, twice, multiple times here, multiple times here. So that seems to be pretty valid as a support line, but given that the price action is below it, we couldn't use it as a resistance level. And that's the 1.2985. It's an interesting comment that you have made, and I wouldn't disagree with you. Now, the comment made by the viewer was that practically he has commented on how narrow the space is between the support lines while there's a wider gap between the resistance lines. I tried to keep it on the troughs and peaks, so whatever we get from the chart, that's what we show. Other than that, I would be noting that the support lines, especially the S1, which was tested here to the upside, here to the downside, the S2, which was tested multiple times to both upside and downside, and the S3 seem to be valid, so I'm keeping them. However, let's make the corrections on the labels at 1.1705. And 40. 1.2150. 1.24. 1.2660 and 1.2985. Now, I know that the distance may seem to be a little bit too wide, but if we drill out to the daily chart, you can see that there are moves like this one or this one, which shows us that the distance between the resistance lines could be easily covered within one day. So practically, despite, especially the resistance lines, despite them seemingly being pretty high, so for L3 is as of around, it's currently at 1.2255. We're talking about 700 pips. It's an extreme scenario. But cable could easily break above the 1.24 within one day and start aiming for the 1.2660. Let's have a look at USDJPY. USDJPY, which has dropped below the 135.80 resistance line and seems to have stabilized. So let's correct this. Let's go hunting. Nice throw here. It was an interesting move as the price action practically tried once again to drop below it. but it was not allowed by the level, bounce back up. And also this level was tested to the upside here, to the downside here, aimed for here. It's pretty valid, I'm keeping it. It could go even lower. I would prefer the first one. And that would be in green, the 129.50. Yep. Let's readjust. Okay, let's make the necessary corrections. 139.65, 137.50, 135.80, 133.90, 131.50, and 129.50. For the time being, given that the price action has actually there was a nice downward trend line which has been broken on Friday. We should note that. It didn't just shift a little bit to the right, it was broken clearly. So we switch our bearish outlook in favor of a bias for sideways movement between the 133.90, which provided support here, and the 135.80, which provided resistance here. So most probably something like this. In case of a bullish scenario, we may see the price action rising, breaking the 135.80 and start aiming for 137.50. On the flip side, should the bears take over, we may see the price action dropping, breaking the 133.90 and start aiming for 131.50. Let's have a look at Safe Haven USD Actually, before we move to USD if we have time, let's have a look at the Aussie. Now the Aussie is on the rise, but there is a catch here. Let's readjust a little bit the chart so it becomes more visible. There you go. On the one hand, you have a nice upward trend line supporting the price action. You can see that the truths are going higher and higher and higher and higher. What's the catch? The catch is that the upward action remains rather stable. You can see it like here. So practically, the price action seems to be heading towards or is in a bullish triangle, an ascending triangle. And the question is, when is it going to be broken to the upside? Should it be broken, then that would imply that the bullish movement is to continue. It's a continuation pattern anyways. In which case we may see the price action rising, breaking the 0.6915, and thus opening the doors for the 0.7040. However, technicals are not the only factors in play here. On a monetary level, we highlight that we have RBA's interest rate decision. Now, I know that a lot of you guys tend to expect that RBA's interest rate decision may not excite Aussie traders that much, true but not true. In the following sense, it's true that on multiple interest rate decisions, RBA actually failed to provide higher volatility for Aussie pair. But there were times when we had surprises, and that tended to create the reverse result, i.e., a far higher we prefer volatility than usual. Anyways, should RBA actually fail to excite Aussie traders, and maybe even the accompanying statement is a little bit inclined towards the dovish side, that could drive the Aussie lower, breaking the 0.6795 and start aiming for 0.6640. On the other hand, we may see a continuation of the upward movement, yet a stabilization could also be in play, allowing for the Aussie practically to oscillate between the R1 and the S1, between the 0.6915 and the 0.6795. The RSI indicator, that was actually pretty high at 63, but it has dropped and it's currently at 55. And dropping still, that would imply practically that the influence of the bulls is slowly but steadily fading away. And that may allow practically for the pair to drop. Once again, two main scenarios. A, we see the price action advancing higher, possibly breaking the R1, 0.6915, and start aiming for 0.7040. The second scenario would be practically the case of the price action moving decisively lower, and that would mean practically a clear breaking of the 0.6795 support line, the price action to drop, break the upward trend line, and start aiming for 0.6640 actively, maybe even approach it. That would also provide us with a clear-cut downward trend line, or at least that could start forming and show us the limitations of a possible bearish movement. However, for that to happen, we have two obstacles. The first obstacle is that the RSI indicator has to retreat also decisively lower than the reading of 50, actually start approaching the reading of 30. While on the other hand, note how the Bollinger Bands have started to converge, implying low volatility, or if you prefer, reflecting the low volatility. Such a surprise would practically force the price action to break below the lower Bollinger Band, which may slow down the bear somewhat. If I'm correct? Yeah. So that should be it from all of us here at IronFX. Best wishes for solid trading.
Hello everyone, my name is Emily. In this video today, we want to continue with trading insights about silver and offer some useful tips. When trading silver markets, as with any commodity, it is important to bear in mind a few important points in order to trade as effectively as possible. First, you need to select a suitable strategy. It is well worth spending some time deciding on a strategy when it comes to silver trading. For example, choosing a long-term investment in silver or taking advantage of short-term price movements. Secondly, monitor the charts. When entering the silver markets, it is important to be fully briefed on the latest market movements by determining the trend in order to maximize profits and minimize losses. Thirdly, study the gold-silver ratio. It is worth checking the gold-silver ratio when trading silver, as it could offer the insight into the potential price movements of the two precious metals. The gold-silver ratio is the number of ounces of silver that can be bought for the same price as a single ounce of gold. Thank you so much for watching us today, guys. See you soon. Bye-bye.
Okay, disclaimer, I'll read it fast. It should not be considered as investment advice or investment recommendation, but instead educational material only. Okay, moving on, this is me. My name is Chen Yongxing, and I'm the trade analyst for the company. Our company is also the finalist for the best Forex research for the year 2019, 2020, and 2021. We are also the finalists for the best equity research for 2020 and 2021. Hey, hi. Okay. What's the agenda? What are the topics that I will be covering today? What is the Wyckoff method? Understanding the Wyckoff method. Okay. So sorry, I'll get the pen out so you guys can see it clearly. What is the Wyckoff method? Understanding the Wyckoff method, improving on the Wyckoff method, and how do we use it in trading? So good news for you guys. I actually use Wyckoff for my personal trading. So I think this is a topic that I like to present, and I have some form of experience using it. Okay, what is the Wyckoff method? Okay, who is this guy? Who is he? Well, he's Richard Wyckoff. Unfortunately, he passed away nearly 100 years ago in 1930 something, and he's the inventor of Wyckoff. His name is Richard D. Wyckoff. Well, he also started he started a school and taught people how to trade back then 100 years ago. And Wyckoff mainly focused on accumulation, distribution, reaccumulation, and redistribution. Well, today I will be mainly covering on the accumulation and distribution, because the reaccumulation, these two topics are actually very technical, and it's actually very hard to spot. It's very hard. So I guess these two are the easier to spot. Okay, let me know in chat if you guys have read up about the Wyckoff method before, or have you guys even tried to implement it in trading? Do let me know. Any show of hands, if you guys have implemented smart money concepts too. I guess it works well with Wyckoff. Do let me know in chat. Okay, who is Richard Wyckoff? Nope, not even heard. Okay, today is a very good day. Okay, very good for you guys to know about this. Okay, who is Richard Wyckoff? Who is he? He's one of the 5 titans of technical analysis back then. All of them, they are 100 years ago. So together with Dow, Gunchart, have you guys heard about Gunchart? Elliott, and Merrill. So he wrote and edited a magazine of Wall Street back then, and he founded the Stock Market Institute. This was the one I'm talking about. He founded this school where he taught people how to trade 100 years ago. Okay, he has this Wyckoff composite man thing. He has the Wyckoff composite man. Wait, give me a moment. Okay. Wait, apologize. I think something wrong with the. Okay. Who is the Wyckoff composite man? Who is he? Well, Wyckoff likes to call it the guy who controls the market maker, and that is the unknown person in the market. So it's just an imaginary man, the composite man. Okay, the 5-step approach to the market using Wyckoff. First, he wants to determine the present position and possible future trend of the market. So what do you mean by determining the present position? What do you mean? So it's either, the market always moves in this way, moves up, then suddenly it comes down. So determining the present position. So with the Wyckoff method, you are able to find out if the market is accumulating, reaccumulating, going up, or distributing where the market continues on a sell. Then we have the slowly go up and comes down. So this is the redistribution. So today, using Wyckoff, later I'll draw on the charts, is actually very, very technical. So I've actually tried to explain to, I've taught people in real life how to use Wyckoff. So it actually takes them quite a while to understand it. So I don't expect you guys to fully grasp everything today. So let me continue. So let us understanding the Wyckoff method. So we have the accumulation area, the first step of Wyckoff, where you can maybe use the RSI or stochastic to find the oversold area. So you can use RSI or stochastic as a confluence to where an accumulation might happen in the markets. So after the accumulation area, price goes through something. What do we call this? We call it the markup phase, which is associated with accumulation. Okay, next we go up. Same thing, you can use at this area, the distribution area, where price consolidates before it comes down. So same thing, we can use stochastic or the RSI to find the overbought area. Okay, instead of markup for distribution, it's called the markdown. So today I'll be only focusing mainly on accumulation and distribution. Okay, there are 3 Wyckoff laws. Only three. Okay, this is just a general knowledge. I think that applying it into the charts, into your trading is more important. So I'll just do a quick run through. The law of supply and demand determines the price direction, where it's oversold or overbought. The law of cause and effect. What causes the price to come down, oversold or overbought? The law of efforts, where the accumulation slowly happens before it goes up. Law of efforts. Okay, let's move on to improving on the Wyckoff method. Later I'll show you guys in the charts using maybe stochastic or RSI. Okay, first, this is very, very technical. Accumulation. So I'm sure you guys are looking right now. What is PS? What is SC? What is AR, ST, STB, Spring? test, LPS, SOS. What does all this mean? Well, it means something a lot more. Let me get into the charts. We are only focusing on it, the ones that I've circled out. Okay, let me exit this. Okay. Guys, let's move on to the charts. So maybe we can, let me look my way out. Give me a moment. Okay, I'll clear this out. Okay, maybe you can look on euro dollar. Okay, so just now you guys have saw the accumulation schematic. So basically all those words have to follow in order. You cannot skip it, it has to follow in order. So let me type it out. So maybe after I explain this accumulation schematic, you guys can send in your charts. You can draw it out live together with me. We can learn it together on how we can implement it and enter a trade. So let's start off. Wyckoff accumulation schematic. If I'm speaking too fast, do let me know so I can slow down. So firstly, okay, let me type out follow in order. Strictly, okay. Follow in order. So first, just now on the schematic, we saw something called PS. But what is PS exactly? It's called preliminary supply. Next, we have SC, selling climax. Next, after that, we have AR. What is AR? Automatic reaction. After AR, we have ST. So what is ST? Secondary test. After ST, we have STB. So it's called secondary test B. After that, we have the spring. Next, we have the test, the LPS. So what is LPS? It's called the last point of supply. And we also have the SOS. Okay, SOS is not save our souls. It's not. It's sign of strength. Sign of strength. Okay. You know that actually learning Wyckoff this method. Actually, when you learn this method, there are many forex gurus on YouTube. They actually ask you to pay a sum of money, to actually learn Wyckoff, how to enter, and they call it their secret strategy, where they show you they can do a 1 to 10 risk to reward. Those kind of very nice Instagram style trades. They say they can minimize their stop loss and have a very tight stop loss with a very nice risk to reward ratio. But all this, they are just selling, so please do not blindly follow them or pay money. They are just selling a course at the end of the day. So let us move forward. Let me look on the 4 hours charts. So let's do a quick markout, a very quick markout. So where do we spot accumulation? Where is accumulation? Let me use the box so we can do it very clean. So let me change it to a box green. Accumulation, where price slowly does the zigzag before it goes up. So we already marked out, we already know this is what I mean by on the Wyckoff method of, let me check it out. You are determining the present position and probable future trend of the markets. So we have marked out this area. Give me a moment. So we have marked out this area as accumulation. Next, we have the very next area. What do we call it? Distribution, where price, let me take a look, where price consolidates before it goes down. So right now we know we are in this market phase. What is going on here? What is exactly going on here? So we are on the 4-hour charts. So as we zoom in, there is a possibility that this area might redistribute. What do I mean by redistribute? Where price can continue going downwards. So, or price can reaccumulate. Reaccumulate is when price really does a zigzag after a retracement and continue going upwards. So I actually use Wyckoff on intraday trading only. I do not do it on the larger time frame, like 1 hour, 4 hours. No, I do not do that because there are many fundamental news that can affect my trading. I like to close all my trades, open the trade in the day, close it before I go to sleep. Okay. So now, since we have established which part of the markets we are in, we know that this area might be a reaccumulation or redistribution. What do I mean by redistribution? Redistribution is, you can spot this area. Let's look back up. Look at this area. Price reaccumulated. Then it distributed. Then it came back down before, at this area, price redistributed. Price, okay, wait. Before price redistributed to go further down. Okay, so let's see, how do we draw an accumulation? So we can probably zoom in on this area right here, this area. Let us zoom in, see whether the chart can bring us closer in. On the 1 hour, okay, I'll pull it down. Let us take a look. Let us take a look. Okay, I'll try to focus in on this smaller area because to me, since I use it daily, using Wyckoff daily, to me, this is a very, very unclean structure. And I'll explain why when we go closer down. So let me check on the 5 minutes. We are now on the 5 minutes charts. Well, I personally think, so this is just my opinion, I think that Wyckoff works very well in the 1 minute to 5 minutes time frame. So we are focusing on this area. So we are now on the 5 minutes charts. 5 minutes charts on the euro dollar. We are focusing on this area. Let us start. Let me bring in this thing here. Make it smaller a bit. Okay. It's too small. Okay. Let us start drawing. So what I like to spot about accumulation is when price breaks the previous low. So this tells me there is a chance that price can accumulate before it goes up. So it cleared everything. Price came down, cleared this area, But you can see on a small time frame, right? Price actually cleared this area. Take a look. Price cleared this area and it reaccumulated actually on a small time frame to go up before it redistributed downwards. So a higher probability trade is when the lowest of the lowest. So you do not want to enter a trade, after it breaks here, you try to enter along. I mean, you can do that, but it's very dangerous. Price might not come your way and it comes all the way down. So same thing, it clears this low, it reaccumulated. So you can see how do we enter this kind of accumulation, but I will not be drawing the schematic out for this area. We are focusing on this area since it is a higher probability trade. So let me go down to the charts. Okay, so since we are focusing on this area, you can take a look. Price came down, it cleared the previous low right here. So we can mark this area out as preliminary supply, PS, right here. I think it's not clear. I've got to go to the 1 minute chart. It's not clear enough, unfortunately. Okay, maybe here we can see it. Maybe 2 minutes. The 5 minutes wasn't clear, so I don't think you can. Okay, remind me. Okay, so as just now we were saying, price cleared the previous low, and you can see this area bounce up. So we call this the preliminary supply, the very first one. The very first one. So I'll mark it out. PS. Let me change the color to orange. Okay, maybe green. Okay, no. Okay, I'll just give it a yellow, it's fine. PS, preliminary supply. Next, price goes lower. Must follow in order. SC, selling climax. So there's a schematic. It's very, very similar to the Elliott wave, where we have to follow wave 1, 2, 3, 4, 5. It's very similar to Elliott wave. We have to follow the schematic strictly. So after SC, price goes up, and what does it form? The automatic reaction, AR. But next, how do we spot the spring? So next we have the spring. So what you notice about the spring is price reacts very, very strongly. It cleared the selling climax. I'll draw out using the line. Price cleared the selling climax. So we form the spring. I don't want to zoom into the 1 minute because it will make you guys, you will see. Okay, so I will just draw it out. It's normally STB and spring together. So STB will come first before the spring. So this is a simplified Wyckoff method that you guys can understand. So after STB, we have the spring. So what do you notice about the spring? Price reacts very strongly upwards, very strongly, and it breaks the automatic reaction, the AR. So what are we forming right here? We are forming the SOS. What is SOS? It's the sign of strength. Sign of strength, but we do not enter. We do not say, oh, well, I want to buy now, so I want my stop loss here. But you notice, you'll be thinking, hey, I already know price is already going to go up, but how come hit my stop loss right here? That is where I will teach you guys how to trade the Wyckoff method. How do we enter a trade? Okay, let us continue. Okay, after the sign of strength, same thing, the schematic must be followed very, very strictly. Next, we have the test, where price comes back down. Price comes back down to check what? To check whether it can break the spring. To check whether it can break the spring, whether it can go lower. So if the test failed to go lower, that's when the schematic is still valid. So what we want to wait for is, this is no FOMO. So this method involves a lot of no fear of missing out. You do not have to have a fear of missing out. So price goes back up from test to form a higher high. breaking the sign of strength and also breaking the test. So we have a, let me get it out, draw it nicely. So price goes down, goes up, clears the high. But this is where we do not enter yet. How do we enter? This is where we start our entry already. We start to enter on the LPS. But the huge problem is we cannot predict how low the last point of supply is. So you can enter however way you want. It's up to you how you want to enter. So some people, they use smart money concepts. They call this a breaker block, you know, like maybe, just maybe, they want to enter on this green box. This green box right here, they in smart money concepts, they like to call it the breaker block. So what they are expecting is, let me clear this line. Okay. So what they are probably expecting is price goes up, comes down, tests, and maybe can go even higher. So they want to enter the last point of supply trade. But since we do not know how low, the last point of supply can form. Let's say we enter right here. Our stop loss must this one, you guys, we do not try to be funny and try to reduce your stop loss all the way down. Your stop loss must always be below the test. Must be always below, because you cannot predict how low price can come down. And as in this scenario, it came down all the way here. You cannot predict that. So you want a very, very safe. You want it to be extremely safe. Stop loss below the test. Okay, you want the stop loss below the test. Just to be safe. A very, very safe entry. But then if you want to, because the test is supposed to be respected. So it's the same concept as, you look at this. It's a higher high, higher low, higher high, higher low. So if you are using these concepts, you are using these smart money concepts, this area must be respected. So it's the similar as this, you can call this, it's very similar to this area as the test, this area as the last point of supply. So it's a similar way of how you set your stop loss there. So stop loss must always be below the test area. So we look, price continues going up. Maybe it clears a high somewhere. Not sure where you guys want to take profits. But at the end of the day, you can combine Wyckoff with any other method that you guys are using. So maybe there's a RSI, maybe just maybe I do not have the indicator on. So maybe on the RSI or stochastic, it says oversold, overbought. So some people are closing out their position somewhere here. Or smart money concepts, this on the left, there is some kind of box. So it's probably they hit a point of interest and then they close off their trade. It's possible. You can look to the left of the charts, maybe somewhere there is something. Just remember to always look to the left of the charts. Okay, so how do we, since I already taught you guys how to enter, you can enter any way you want on the retracements when there is a last point of supply. But let me show you how I personally refine the trade, refine it down. I refine it down. So I'm using something called ICT fair value gap. So I'm combining ICT fair value gap. What is ICT? Inner Circle Trader. Have you guys heard about him? Do let me know in the chat. Have you guys heard about ICT? I think he's pretty trendy, pretty trending nowadays. Have you guys heard about him? The Inner Circle Trader. Let me know. Let me know if you guys have heard about him. Yes. Okay, you have heard. Have you watched his videos? I think it's very informative because he's providing all this for free. So let us move on. How do I refine the trade? I do apologize for that. Okay, thank you guys for waiting. Let me move on. So how do we refine the trade? Okay, you guys should check him out on YouTube. You guys should check him out. So how am I entering it? How do I refine the trade? What I want to do is, as you can see on the 2-minute chart right now, there is something called the market imbalance. Market imbalance. So how do we spot the market imbalance? So what we are looking for is, look at this area. You guys notice something? You guys notice it? Price has not previously come back down to clear this area. There's an empty area. So this is not a was a market imbalance. You can see price came down to fill it before it went back up. So let me draw it out nicely. Price always, if not most of the time, comes down to clear the market imbalance. So I'll use a box, draw it out. You can see price comes back down all the way just to clear the market imbalance. You can do whatever you want and before it goes up, but my stop loss is below here. So all is fine. So what I like to do is my entry at the top of the market imbalance, stop loss at the bottom, and head up all the way up. So you can see, instead of entering maybe an impulse entry, let's say you want to have a buy stop. So you guys maybe after you draw the schematic SOS test, then you are waiting. Or if he breaks the SOS, we can have an entry with stop loss below the test. So if you guys do a buy stop method right here, your risk to reward might reduced to 0.57. Let's say we just say a scenario where we are aiming upwards to here. So if we do a buy stop, you guys start to have those psychological feelings like, oh, I draw everything right, but then price is coming down. Price is coming down. Oh, I'm in a loss. You'll be thinking. So depending on how much you risk, I risk 1%. So let's say I already entered here. By the time price came down to here, I'll be thinking already, oh, should I close or not? But then end of the day, I trust the Wyckoff schematic. If it's right, it's right. If I'm wrong, I'm wrong. So what do I mean if I'm wrong? If I'm wrong, price just goes below test. So means that the schematic is no longer valid. So this is what I call when I refine my entry. So this was a 0.98. I pull it down to the market imbalance where price goes in and tap into the market imbalance, and is increased to 2.72 risk to reward. And I already know this entire area based on the schematic is accumulation schematic. Well, it actually takes time to start spotting this live on the markets because you will be constantly drawing all these words out, all these words, just trying to make it fit. If it doesn't fit, don't force. Do not force it. Do not force the words to fit into the charts. If you are forcing it, it's wrong. So if my stop loss below, price continues climbing upwards. So maybe let's do a replay. We can see how price reacts to the market imbalance area. Why I like to set at the top, I'm just afraid that if you just want to increase your risk to reward, you refine it all the way down. You want some kind of minute entry. Let's say you are trying to find a very clean entry. Have a very nice 1 to 7 risk to reward. But what if price doesn't come all the way down? You already spent how many hours? You already spent 10 hours. The whole schematic took 10 hours to form. Took 10 hours, and then you want to decide to refine it all the way down. But let's say you refine it all the way down and price doesn't hit. You will even feel more fear of missing out, or your psychology gets affected. You draw everything was right, but just because you want to refine your entry even lower, even smaller, a better risk to reward, you missed out on the trade. That's not what we want. It's either you get on the train or you do not get on at all. So for me, I rather have a lower risk to reward, and I already know there's a 100% chance I've gotten onto the train. If you want to haggle with prices, you know, like in the market, you want to buy some, maybe let's say you want to buy a fish, but then you keep haggling on the price, you keep trying to lower the price. Eventually they don't want to sell it to you. So do not get into a situation like that. Either you get on the train or you don't get on at all and you can go home. So I like to set my buy limits at when the price taps into the market imbalance. So there's a chance that it can tap into the market imbalance and it can just go up. Well, but in this case, in this specific case, price tapped in, continue, goes down, and goes back up. Well, there's also another way, one more way that you can actually refine your entry. How do we do that? Well, instead of just drawing a plain box, this is how I personally do. But I usually do not do that because there are chances where the trades get missed. So this market imbalance, we have already identified this area. So I'll be using a Fibonacci. So let's take a look. Fibonacci line. So it looks messy, right? No, I'm using my template. 50% area. Take a look. So if you guys want to know the settings, so what I like to do is sometimes I like to enter at the market imbalance and at the 50% mark, the 50% area. So I can reduce. So instead of 2.72 RR, I can increase it to 3.32 risk to reward. This is just my personal way of how I refine the trade. So with that, we have increased our risk to reward to 3.32. But I know you guys, sometimes some of you guys like to say, oh, there is actually one more candle here. Look at this candle. Wow, we have this candle. Why not you enter there? Why not you enter there? Why not you enter on this candle? Because there's a chance, as I mentioned, because of the market imbalance, price can actually just tap into the market imbalance and fly. So instead of entering right here, I know you guys can get a better entry, but what if you miss the trade? I rather enter on the market imbalance than not get on at all. So with 3.32 risk to reward, if you guys want my settings on how I do this Fibonacci, so in the Fibonacci you can find it, and under the cross, the third symbol from the top, and it's called a Fib retracement. Fib retracement. So what are my settings? Double click on it. Let me show you. You guys can copy it. Can copy my settings for the Fibonacci. Okay. So I only use 0, 0.5, and 1. So 0.5 is the 50% area where we call it, when price is below the 50% area, we call it the discounted price. You are getting a cheaper price. So I try to enter at the 0.5 mark. So I do not tick the trend line, my lines level, this is a normal line. Scroll down, background, use one color. So I do not check the others, I leave it as that. So we have a very, very nice, clean Fib. Very nice and simple, clean Fib. If you guys, if somebody missed out on that, do let me know in chat so I can open it up one more time. Okay, let me clear this out. You guys please screenshot this down. please screenshot this down before we continue. Please screenshot this. Save it on your computer. I've already shown you guys how I trade. This is how I trade on my personal accounts, on a live account. With this refining, using the accumulation schematic. Okay, let us move on. Let me clear these charts. You guys screenshot finish? Okay, I'll clear it. Okay, let me know, can we get the recorded video? I'm not sure about that. They might upload on YouTube. They might upload to their websites. You can check it out in a few days' time after this webinar. Okay, let me clear this out. Okay. Okay, let me know. Do you guys think it's very, very technical? Is it hard to follow? Is it hard to draw? Okay, before I continue also, the automatic reaction we base on, I would say common sense. Automatic reaction is when price goes up very, there's a huge reaction. It's bigger, it has to be bigger than the selling climax. Also the spring. What do you think of spring? Spring is when you are, jumping. You are jumping, and then spring also must have a huge reaction. YouTube channel. So let me check whether I can link you guys to the YouTube channel. Okay, something to digest. Yes. Okay, I'll tell you guys in a bit on how I actually memorized all this, the entire accumulation schematic by heart. Is it? Okay, let me find the YouTube channel's URL first. Okay, so we have the IronFX YouTube channel. So maybe you guys can find it here under IronFX webinar series for advanced traders, intermediate traders. So you can actually look through all this, can learn. Maybe I'm not that sure that IronFX might upload this webinar onto YouTube. You guys can find it under IronFX. Let me send it. And under the playlist. Okay, I just saw somebody ask, is it necessary for the market imbalance to occur, or it can just retest the SOS and keep going upward? Based on my personal backtesting during the weekends, when I'm bored, I make use of the replay function, how price reacted to that area. Let's watch it together live. Based on my backtest, price usually is not all the time, comes back down to clear the market imbalance. This area. Let us watch live. Let me use the replay button. Let me zoom in more. Let's take a whole update. See, price goes in, taps, and it did not clear the stop loss before price. Okay, how do I manage? Let me play back again. How do I manage? The moment price goes up, clears this area, you are already expecting price to continue going up. What I like to do, to get my mind off the charts, I like to probably close a percentage of my trade the moment price clears up. Because why? Why am I saying that? It's possible that the entire Wyckoff schematic turns into a redistribution schematic on the overall. So this area, it might just continue go down. Okay, I will not be explaining redistribution and reaccumulation because it's a very, very complicated thing to digest. You have to get the basics, accumulation and distribution right first. So I like to partial partial my trade once it breaks the high, and then I can go and do my thing before price reaches the final take profit. So if let's say if price goes up and decides to come back down, I already close partial. Price decides to come back down, break even. It's fine because I already took money into my account. I already took the profits, some profits. So yeah, see what goes on next. Comes back down, test continues going higher. This is what we call the markup phase. Okay, let me end this replay. Okay, so where are we? 2-minute charts. Okay. I'll give you guys time to screenshot once again. Okay, I'll give you guys time to screenshot again if you have not done so. Also, let me send in chats if you guys are interested. Since we only have an hour, I actually have my, let me take a look at TradingView. Okay, I actually did this for free because I was actually teaching people, and then people are asking me how do you do Wyckoff? So this is my personal account where I teach for free. I explain how Wyckoff accumulation happens and Wyckoff distribution. How does it happen? Okay, I'll send the link to the chat where you guys can, if you guys support me, you guys can follow me, you guys can give me a boost. You guys can boost my idea. Just give me a boost, give me a follow, it's fine. Where I summarize it, accumulation and distribution. So I actually drew it out. I did it in my free time, so you guys can take a look at it. Okay, I sent it to chat already. Okay, let us continue. Let's back to the slides. We are going on to distribution. The distribution schematic. So you can see here, distribution, same thing. We have to follow PS first, BC, AR, ST, but there's an issue with this. I do not draw my sign of weakness here. I actually draw it here. This one I ignore it completely. So I just take it as price goes up, UT, UTAD. The distribution is actually way more complicated than accumulation. But if you get it right, you are right. UTAD, test, last sign of weakness, last point of supply before price goes down. What you want to be doing is what you want to catch this. You want to catch the last point of supply. You are not going to trade the entire schematic. What you want to catch the last point of supply so you can have a fast take profit. That's why I say when you're right, you're right. It usually happens very fast after the last points of supply. Let me clear this. I'll do a quick one. How do we implement it into the TradingView charts? Let me exit this. Okay, let us take a look. Let us take a look. Okay, so just now on the 4-hour charts, we have already checked out this area. That this area might be the distribution. Okay, let us focus on this area. This is actually a very, very nice distribution schematic right here. So how do we draw it out? First, you notice price shot all the way up, shot all the way up. Just remember you must have a zone 2. You have some kind of points of interest. You have market imbalance, whatever kind of block that you guys might have, your trading style. So always look to the left of the charts to have some kind of points of interest where you expect price might head towards. So first, you notice price goes up, the markup phase. After the markup phase, we have the preliminary supply PSY. Wait, so sorry, before we start, let me type out distribution schematic, PSY, preliminary supply, I'll put it to the side, PSY, BC, climax, they are automatic reaction, ST, secondary test. You guys might notice for distribution, we do not have STB, secondary test B. Instead, we have UT. What is UT? Up thrust. After UT, we have UTED. Up thrust after distribution. After that, we have the usual test and then the LPS, the last point of supply. So moving on, let's get it quick. So PSY. So you can actually, I usually do not draw the PS. I just draw out BC. So for beginners, you probably got to draw everything out. BC, the BC, price comes down. Quite a strong momentum. That's where we have the automatic reaction. After the automatic reaction, we have the secondary test, ST. But same thing, I usually ignore the PSY and the ST. I usually do not draw these two. But since you guys are new to this, please draw everything out. So after the ST, we have the up thrust. So how do we draw the up thrust? Take a look. Price cleared the buying climax. So at this area, we can call this up thrust. So what you guys might want to know, what is BMS? What is BMS? BMS is, this is not part of the Wyckoff schematic. This is what I just write for. Not this. BMS means break of market structure. So BMS, break of market structure, this is not part of the Wyckoff schematic. It's just what I used to identify. You guys can draw an X if you guys want to. After the up thrust, there must be a UTED. So UTED price clears. Okay, price did not clear this time, so it's probably on the very, very small time frame. Okay, I do not like that. I do not like that when it happens. I have to go on to the 1 minute. So same thing, I can label it out as up thrust and up thrust after distribution. You guys got to go onto the 1 minute chart. I do not want to do that because TradingView has limitations. When I go far back to a certain distance, I cannot see the 1 minute chart. So normally I like to see Wyckoff on the 1 minute chart where I can spot the UT and UTED. So UT is supposed to go up, break the BC, UT, then UTED. So if you go on the 1 minute, you will notice it something like that. It's usually clearer on the 1 minute charts. So after the UT, you notice that price goes down, then starts to go down. So you'll be thinking, oh, I have missed the sell, I've missed the distribution sell. No, bro, you have not missed it. I forgot to add it in. We have, after the UTED, we have the SOW, sign of weakness. So where do we draw this sign of weakness and how do we answer a distribution? A very, very fast one. So notice, price came down, cleared, break of market structure. But the huge problem is, you guys might be thinking, oh, a break of market structure, but then this is just a wick. WICK, this is just a wick. So let's say if you guys label this area as test and price comes down to clear one more time. Wait, let me bring up LPS. So let's say you guys think that LPS might happen here. You guys are trying to short. Remember just like I told you, stop loss above the test area. So you guys will probably hit stop loss by then. So how do I you know, wait give me a moment, I got a dry throat, sorry. Okay. So how do you guys avoid this kind of situation where price hits your stop loss? Take a look closely. Market imbalance. Take a look. Very clear. Look at this area. Price came up to clear it very nicely. There's a market imbalance right here. This is on the 2-minute charts. Take a look at this area. Price actually came out just to tap into it, just to clear the imbalance. So you guys will understand now why I emphasize a lot on markets imbalance. Price came up just to clear it before it came down. So I'll take this area as when price goes lower. This is a strong break of market structure. Why? Why this is weak and why this is strong? Because this is just a weak WICK. It's not strong enough, but this is a body closure. What I want is body of the candle to close below the automatic reaction. So I set out this area. I do not just, wow, I want to get a very nice entry. I do not just do that because price might come back up and continue going upwards. So that's the reason why I always emphasize we only enter on the last point of supply. So since we have marked out this area test, we patiently wait for price to come down. Price to continue coming down to break our structure one more time to clear the test area. Break our market structure. This is where we start to plan our entry. This is where we start to plan. Just remember, not every market imbalance has to be cleared. So if I draw it out, you can see there are so many. Wow, there are so many of them all over. It's all over on the 2-minute charts. So which one do I enter? There are so many. What I like to do is I enter on the very first market imbalance, the first one. So I only care about the earliest one. The earliest market imbalance. I do not care about the rest. But that doesn't mean, let's say I enter already. Doesn't mean my stop loss here. You will have been hit too. I always emphasize that the stop loss must be above the test area. So with that being said, that I've ignored all these market imbalance and only focus on the first one. Let me try to clear this chart. Okay, so as usual, I like to say refining entry. Refining my entry. Same thing. Take a look. I like to enter the market imbalance, the very first market imbalance. I enter here, stop loss at the top, because I cannot predict how high the last point of supply will go before it comes down. So my stop loss always is at the top of the test area. So you can see price continue going downwards. And this schematic must be followed very, very strictly. Please screenshot. Please screenshot these charts. Please screenshot this before. Okay, just screenshot. Please screenshot this. It's very, very important. People usually don't teach it for free. They actually charge money for this. Well, I've been using this for over 1 year. I've used Wyckoff for over 1 year. And this is why I can memorize it well. I can teach you guys better. Please screenshot this. especially take note on the markets imbalance area that I highlight and how I refine my trade using the Fibonacci. So with that being said, if you guys have any further questions, feel free to let me know in chat. Feel free to let me know. You guys have screenshot this down. And remember to give my accounts a follow. I'll send it again in chat. Do check out the trading idea that I've done for free on TradingView. You guys can take a look. I've sent it into the chat. Okay, if you guys have any further questions, do let me know in chat. If not, I will be ending the session. Please screenshot this. Thank you very much. Yeah, if you guys are still typing a question or something, do let me know. It's very, very technical, but if you notice, that's why I always mention, you catch the last point of supply, price usually reacts very, very fast all the way down. Okay, bye. Thank you for joining me. Goodbye, guys. Enjoy your day. Enjoy.